Do you know how much Medicare costs? And no, the answer is not that it's free. Most people don't realize what the true cost of Medicare is. So by the end of this video, we'll tell you enough about the cost so that you can plan ahead for yourself and for your family.
We're Shannon and Mike, and we're the founders of Healthcare Genius.
For the best advice on retirement and healthcare, subscribe to our videos and click the bell to be notified when we come out with new content.
So, as Shannon mentioned, Medicare is not free. When you look at the different parts, Part A, which is the hospital cost, for most people that's going to be free. There is no cost to that portion of it. The exception is that if you've worked less than 10 years under Social Security, then you may pay an additional premium for Part A. Part B has also a premium. Part B, remember, is for the doctor's costs. That premium is $135.50 a month. And then Part D costs, again, nothing that you pay out of pocket to Medicare for that, although we'll mention something in the future on it. But you do have the premium that you would pay to the standalone Part D drug company, which can range anywhere from $20 to $100 or more a month, depending on which plan you choose. Now, the gotcha. The things that most people don't understand is that the Medicare premiums are not the same for everybody. This is known as means testing. So what does it mean, Medicare means testing? It means that you're going to be paying more money the more money you make in retirement. So this is going to be a big deal for a lot of people. It can range anywhere from 2 to 3 times that $135.50. So it's a lot more than most people are used to or thinking about. And then in addition, Part D has a means testing premium as well, which can range anywhere from about $15 upwards of $70 a month in additional premiums on top of the insurance that you're buying.
And it might surprise you how many people are actually affected by means testing. You have to make upwards of $85,000 a year, or as a couple, $170,000 a year. So this is really something that's affecting a lot of Americans, yet that a lot of people don't talk about.
Another thing that you have to look at when you think of Part B means testing specifically is that Medicare Part B has increased at over 7.5% since its inception in 1966. So that means that in less than 10 years, those premiums will be expected to double if everything stays on its current course. This is why it's such a big impact for younger people, because the costs are going to go up significantly.
So now what we want to talk to you about is the punch in the gut tax from Social Security. The chances are you have not heard of the punch in the gut tax from Social Security. There are a couple things that make up that tax that we want to cover. First, what most people don't realize is that while you're working, you get some significant tax breaks from the government to pay for your health care. You don't have to pay state, FICA, or federal taxes. And unfortunately, that changes once you are retired and once you are signed up for Medicare.
Shannon, one of the interesting things that we've taken a look at is where do people, how are they getting their money when they're retired? And believe it or not, most people are getting it with taxable dollars. So that would be from Social Security, it could be from their 401k plan, a pension plan, maybe an IRA. But when you look at the statistics, that's where most people get their retirement income. So what Shannon mentioned, not having a tax break for your Medicare premiums can be huge.
Absolutely. And another thing to keep in mind is that your Medicare premiums actually come right out of your Social Security check. So if you are accepting Social Security when you're retired, those premiums will come out of there automatically before you even see the check. And if you're not, you have to write a check for your Medicare premiums to the Social Security Administration.
Boy, that is a punch in the gut, Shannon.
We have done a significant amount of modeling for some of our, what we consider younger clients in their 40s and 50s. And one thing that may surprise you is that by the time some of these folks retire, they had thought that they would receive Social Security income throughout their retirement. And what we find is that within a couple years of retiring, not only is the majority of that check being eaten up by their Medicare premiums, but within a couple years, they'll actually completely run through all of that Social Security income and then pay some to the Social Security Administration to cover those premium costs. That modeling is just based on the rate that premiums have increased historically. So it's pretty astonishing, and it really shows how younger people need to start preparing.
Well, and Shannon, I think the other thing that people need to be thinking about when they look at this is look at our budgets and look at the baby boomer generation coming through. We have a lot more people who are going to be retiring and taking Medicare and Social Security, with a lot fewer people who are going to be paying into the system. So it's definitely an issue. We know it's an issue because Social Security, every year when they send out their notice for how much they're going to be able to pay in benefits, they tell us that around 2035, they won't be able to pay the full benefit a dollar for dollar, and it's going to be closer to 77 to 80 cents. So the federal government's telling us some things that they want us to know, which is we better be prepared.
Leave us a comment if you knew about the punch in the gut tax from Social Security, or if you had to learn about it the hard way.
So as Shannon was talking about the punch in the gut tax, the thing that really surprises us is that a lot of people don't know about this, including a lot of advisors. We've had a number of instances where we've spoken to advisors who are turning 65 who asked for our help, and they weren't aware of those additional costs and kind of really how it affected them. If you're looking at this and saying, gosh, how come no one ever told me about that? That's one of the reasons. But it can be a huge cost, and I think the thing that we try to help people understand is that you can plan for this. If you wait till you're 64 and 3 months, which a lot of people do when it comes to Medicare, before they start planning, then sometimes it's too late. But if you start thinking ahead in your 40s and 50s, you should be setting aside money in different investments that are going to be tax-free so that you can use those investments to end up paying for the healthcare costs and at least saving the tax side of things. Now what we like to do is kind of tell you about a friend of ours who did not use some of these strategies, came to us when he was turning 65, and again, thought he knew a lot of things about how he was going to retire. Matter of fact, what he had told us when he came to us was how excited he was that his health insurance premiums were going to go down from what he was paying. He'd been paying about $1,000 a month, or at least that was the total. His employer picked up about half of that. So he was paying $500 a month, and he was excited that Medicare was going to be closer to that $135.50 that we mentioned. Unfortunately, when we went through the numbers with him, he described it as being punched in the gut. So that's really where that phrase comes from, because he didn't realize a couple of things. Number one, he didn't realize the fact that he wasn't going to pay $135.50. In his case, he had to pay an additional $297 on top of the $135 because he was earning about $170,000 a year. The second thing was he didn't realize he had to pay a Part D Medicare cost, which was going to be another $70 a month. So that was $360 on top of the $135 that he originally thought he was going to have to pay. Then he looked at a Medicare supplement plan and a prescription standalone Part D plan. Those added $125 and another $30. So all said and when it was all said and done, he was about at $600 and some dollars. So he looked at us and said, so I was paying $500 and I have to pay $600. He said, I thought it was going to go down. Then we had to really break the news to him. And that was the fact that he no longer could really take a tax deduction for that, for those Medicare premiums, as well as the supplements that he was taking on that $500 that he was paying. So when you factored that into his tax bracket, his net cost was over $1,000 if you factored in taxes for the same kind of health care that he had that he was paying $500 for.
So now what everybody wants to know is, what can we do about it? Like Mike had mentioned, if you have time, there are certain things that you can do. If you have an employer that you can talk to, there are different ways for employers to help out and to help pay for these costs that you know are coming in retirement. And some of these solutions are really tax efficient to your employers, so it might be a good idea to have a conversation with them about it. And even if your employer isn't in a position to help you, there are different things that you can do, different investments that you could make, like Mike had mentioned, that are tax efficient and that will allow you to pay for some of these things in the future with tax-free dollars. If you are at retirement age, and if you're about to go on to Medicare, or if you are now, and if you're trying to figure out how you're going to pay for this means testing that we've talked about, and you've felt like you've been punched in the gut, there are still some things that you can do. related to modified adjusted gross income. So that includes pretty much all income, but there are some things, the health savings account like Mike had mentioned, some annuities, some life distributions, some Roth accounts. Feel free to go check out another one of our videos on different strategies that you can use to plan. Now, if you don't really have an idea of your costs, that's the first step in planning. So click on the link below to become our client.